Burry claims the market has crashed, and the majority is clueless. Another outrageous prediction from Michael Burry is currently rattling the financial market with his claim that this is collapsing. Or is it possible that the market had already collapsed? Michael Burry is betting his billions on this forthcoming catastrophe, and we are keeping an eye out for it. Make sure to finish this video since it could significantly impact your future business and investment dealings. This channel is dedicated to keeping investors informed of the latest developments in the financial market and what financial experts have to advise about them. Subscribing to Dinero Association will keep you up to date on our video uploads. Continue watching to learn why Burry believes the market has already collapsed. Market collapses are an advantageous moment to protect wealth since they provide an opportunity to acquire years of growth in a short of months from the bottom of a crash. Michael Burry foresaw the dot-com bubble and the 2008 crisis, as well as paving the path for GameStop's rise. Burry earned millions and in some cases billions from each short-term event. Michael Burry now feels that the US is on the verge of experiencing an enormous crash in history. Burry is placing a sizable wager on it, just like his previous forecasts. If the prediction is correct, the stock and cryptocurrency markets might plunge by as much as 95%. Bitcoin and Ethereum both experienced significant declines midweek of November 2021 after reaching fresh all-time highs last week. This week's declines come on the heels of President Joe Biden's signing of a $1.2 trillion infrastructure plan into law, which includes restrictions affecting cryptocurrency investments. The Biden administration report recommends new legislation to regulate stablecoins and a Federal Deposit Insurance Corporation. The agency is exploring the possibility of extending crypto support to banks. Last month, the first Bitcoin ETF was issued, marking the cryptocurrency's debut on the New York Stock Exchange. Michael Burry is on base to keep the annual profit at a respectable level. A return of 22.8% each year has been Cyan Asset Management's average since the beginning of 2016. The SEC visited Michael Burry and his Twitter account was mysteriously deleted after he posted that he had added over $271 million to his already extensive collection of money after purchasing GameStop stock over a year ago. MoneyWeb reported that Burry purchased 3 million shares of GameStop stock through Cyan Asset Management in 2019. The Big Short movie details Burry's success in predicting the 2008 financial crisis and the money he gained. Since the crisis, the market has altered radically, with technology firms dominating the S&P 500 and institutional investors like Burry pushed to the sidelines while retail investors take center stage. Michael Burry, like the 2008 crisis, is not simply predicting a financial market meltdown. Burry believes the impending collapse will affect most assets. Surprisingly, Burry's main bet is based on potential US currency inflation. Before continuing, it is essential to understand inflation. Inflation is a general rise in prices. Deflation, on the other hand, is a generalized price fall. The relative importance of products and services in the home budget determines consumers' cost of living. Many variables can cause inflation. Inflation is caused by increased government expenditure, hoarding, tax cuts, and global price increases. These variables raise prices. Demand increases costs, which causes inflation. Burry claimed that the US government is supporting inflation through modern monetary theory-inspired policies. Debt, gross domestic product ratios, and M2 are rising rapidly, yet retail sales and the PMI are stabilizing. Burry's entire premise is built on MMT's destruction. According to MMT, governments should borrow or print money until their economies reach full employment. In other words, governments should increase the money supply during a recession until unemployment returns to normal. The thesis claims that government should not only worry about inflation until full employment is attained. The Federal Reserve now uses modern monetary theory, but there are a serious objections. Countries that spend, tax, and borrow solely in their fiat currency, such as the US, UK, Japan, and Canada, are not constrained by revenue restrictions regarding federal spending. Michael Burry feels that this situation is very reminiscent of the early 1920s German hyperinflation. Burry cited an article stating that prices were stable in Germany and that both business and the stock market were booming. The mark's exchange rate versus the dollar and other currencies increased for a period, and the influence briefly became the world's strongest currency. Germany was already experiencing significant inflation due to the war's impacts and the growing national debt. The government has recently issued more currency to compensate striking workers. This money supply explosion resulted in hyperinflation. As more money was given, the higher prices increased. Propaganda was utilized extensively by the German government during World War II to cover up inflation. Reichsbank policies could not be evaluated because all German stock markets were shut down. Aside from it, only those with access to neutral markets like Amsterdam or Zurich knew what was going on. After the war, when the censorship was withdrawn, but the Allied embargo was maintained, everyone with eyes to read realized that Germany had already experienced an economic catastrophe comparable to the military. After learning about Michael Burry's forecast, do you still have confidence in the financial market? Let us know what you're thinking and what you plan to do next in the comments below.